Hello, good day everyone. This is Roman for us from Real Mind Education. And today I'll be discussing about market structure, how to attack it, and with integration of Ichimoku. So I would like to welcome George. Welcome George aboard. So today will be, you know, very exciting day to ask questions about Ichimoku and market structure that I'll be presenting today. And we will do backtesting on TradingView as well as after my discussion. Feel free to ask questions so that I could clarify it for you. Okay. So, but before I will begin my presentation today, I would like to remind everybody that Forex trading is a high risk business and it takes training before you indulge into this business. So you need to master your trading psychology, market analysis, and risk management. So today I'm going to begin with talking about market structure so that we can attack the market structure properly with its the right bias, and you will not be tempted on to sell at the wrong timing. So I can teach that to you today, and this will be a very profitable strategy to attack Forex market. So this market structure attack is specifically designed for Forex market. Okay, so I'm going to share now my screen. I will have my, okay, just a moment. Okay, so I'm going to share now my screen. So we will be discussing about GBP USD. Hello, George. Welcome aboard.
Hello, I can hear you.
You can hear me now?
Yes.
All right. Thank you so much for attending today. And this could be a good time that you can ask questions about my presentation today. Okay. So
Yes.
let's get started, and I'll be presenting the market structure of GBP USD. Just a moment. Let's go to pure price action PA. So what we're going to do is we're going to do top-down analysis. So by saying top-down analysis, we are going to analyze first on daily, then we can attack on H4 or H1. But we are going to check the market structure as well on H1 before attacking it. Because in this market structure attack that I'm going to present today, we are going to attack on weight test. All right. Okay.
Yes.
So we have different way of attacking the market. So first, we will begin our analysis from here. If what structure that we can see here in this area. So if we're going to look on daily, we can see that the whole structure over here, we are in a ranging market, right? If you're going to look at this, so this is the range of the market in daily analysis. Okay. All right, that's the range. But this is a stepping down range, right? It's from
Yes.
from the higher. You can see here there is a false breakout on top on the range, and probably there are a lot of small traders that will be trapped in this location, because as you can see here, we can also say that this area is a range. right?
Yes.
So when it is a range, what is our best strategy? What do you think would be the best strategy, George, in attacking range?
You can use a breakout.
Yeah, that's certainly the best way to attack the market. So if we're going to look in this location, actually in daily, this swing high is actually a breakout, but it can make the novice to keep holding their long position because they see that the market is having a very strong momentum up. So if we are going to attack it first here in daily market, I'm really sorry, in trading view, sometimes I was not able to master on how to plot the squares. So George is right that we are going to attack the market. As we can see it here, the market is from here, it's going up, and the market is ranging in this location. Small range, this is corrective structures in other way. From here, this is the impulsive move, corrective structure, impulsive move. So in here, we can see also a structures that the market is from here. If you are going to look at here, you can see small ranges, right? This is a small range.
Yes.
So this is a small range right here. All right. Okay. That one is a small range. And right here is another range, right?
Yeah.
So what we're going to do is we're going to analyze the market on attacking the ranging market. So you're right, George, that we are going to attack the market when it is ranging. We have to wait for a breakout. But what is the safest way to attack the market on breakout? What do you think, George?
You can enter immediately after it breaks, or you can wait for a retest.
Very perfect. So you have really a good idea that we are going to wait for a rate test. So that's right, because on top on this location, the market structure is right here. So we have to wait for a violation of this area before we are going to attack the market. But if you can see, this area right here is also a structure. This is the previous breakout point on the daily, if you can see it here. So, but you can see the retest is happen on this breakout point. As you can see, there's another retest here. You can see that pin bar, that's a retest. So that's the safest way to enter the market on our retest. So if it is a breakout, let me draw something. The best way to attack breakout is just for a while, I'm going to illustrate something on how to attack the breakout. Okay, so the best way to attack a breakout on a market which is ranging is you have to wait for the market to either test here. This is also a good portion to attack. If you are an aggressive trader, you can attack right here, and you have to wait for the market to enter the zone and retest the support. Then you can enter right here and it will go down. Or you have to wait for a breakout, but do not chase because it will hunt your stop losses. The best way is you have to wait for the retest and the market will move up. So in this case right here, we can see that the market does is it break out, but you can see there's a retest on lower time frame. You can see the week. That is a retest on this level. On this area, it is a retest on lower time frame. You can see, but you can see also on daily that it is a retest. But to make it sure that this retest is really profitable, you have to go down to 2 time frames lower. So what I mean is you can go to 4 hours and you can go to 1 hour, and we can analyze the structure in this location. So I'm going to erase this one. Okay. Remove. Then remove. And let's go to 4 hours if what we can see. So that's how to confirm our retest if the structure in 4 hours is confirming it. So I'm going to circle this area and we are going to investigate this area if what is the market is doing on lower time frame. Certainly this area is a breakout point here in this because this is a range. If you're going to look on a bigger picture, this is a range from here and here. So you can see there's a breakout and a retest. And here, this is also a breakout out from this small range. As you can see there a inverted hammer, which is a signal for a long entry. Did you see it, George? The inverted hammer?
Yeah. Yes, I
So,
can see it.
and then there is a good trend bar in daily. And as you can see, as it is moving up high, you can see that the candle in daily is ending in a shaven candle. So that's a good signal for buy at the close. So you can buy here at the close. Here, shaven market. But in this location, I would certainly wait for a retest. So let's go down to 4 hours, if what we can see in this location. 4 hours. Okay. Where is it? I was not able to. Okay. Just give me one moment and let's go to that location that we marked. That was, what date is that? Most probably it was in somewhere in, okay. Just give me a moment so that we can further investigate the market. This is how to confirm that our retest entry is supporting the retest breakout of the market structure. Okay, where is it? Let me go back to daily so that I can mark the.
You're almost there.
Uh, where is it? I'm really sorry, George, for taking it so long to look for the market where we analyze. Okay. Probably I was beyond on the level that we are trying to. Most probably it would be better to use this one. Okay. Sorry for that, George. Yeah, we are here, but my drawings was deleted. We are analyzing in this level, as we can see. So all my drawings was deleted. So I'm going to mark this again. Is a market. We are analyzing the present market structure. This one. All right then. So it takes me time to. So we have to go down to lower time frame. And this one, I mark this a ranging market over here. And right here, a ranging market from there, but it's a stepping down ranging market. Respect this level as well. Okay. All right. Okay. So let's get down to 4 hours. Let me make it smaller. Yeah, there it is. So then I'm going to make it bigger so that it will be bigger. Uh, so we can see it here clearly. Okay, come on. Okay. All right, so it's now clearer now, George. You can see it clearer.
Yeah.
As we can see it here, we can adjust our market structure. So this is our swing high here, as you can see. See that one? This is the zone on 4 hours. Perfectly, right? So we are in actually in Forex market, we do not just observe a one trend line. We will mark it as a zone. So this is a zone on the support as the market break it up. See it? So if you are a prudent Forex trader, you will certainly wait for a breakout, then wait for the pullback, and you can attack it here. And your stop loss will be, for tighter stop loss, you can put your stop loss way down the support zone or area. Or if you'd like a wider stop loss but high risk, but you need to reduce your position size, you can put your stop loss over here. Because you know, the mastery or the institutional traders love to hunt the market, I mean the stop losses of the retail traders for reducing their slippage and then having a discount on the attack of the market. So that's why we need also to attack the market on a discount. So as you can see it here, this is the market structure, and it was broken. There was a retest and attack the market. This more or less 100 pips probably, if we're going to measure that one, more or less. And then what swing high that we are going to note for the retest again? This is a good violation of the market, and we have to wait for a breakout in this location, which is, this is the zone right here. So you can see as the market broken it, as the market broke that level, it retest, and you can see here a pin bar and a spinning or a doji candle with a trend bar. So on this location, it's really good area for attacking the market. If you were not able to attack this market, there is another opportunity right here in this location, and you can attack the market in that area with your stop loss right here. See that one? And go market as the market went up. So if you're going to mark the trend line from here, The trend line that you can do, the clear respected trend line that I can see, because you're going to mark the trend line as the market respected that area. This is the respected trend line. See that one?
Yeah.
So we have really to look at the trend line that are usually respected. As you can see it here, as the market, you need to check the horizontal line. Then after checking the horizontal line, look at the respected trend line. And you can draw also a respected trend line on top of the movement. That's the respected trend line. So you have to note that one so that you can attack the market properly. So as the market move up, attack it here. There was a retest here. This is the breakout point, and this is the trend line. Opportunity again. Attack the market. Here you can see it here that this is also a swing high that was broken. See that one? So the FX market really love to do this most of the time. Break and attack the market here. But as you can see it here, the momentum is winning. As you can see, the gap here is decreasing. You can see it here, the gap is decreasing compared to this breakout right here. You can see the momentum is really strong here. As the market went up, you can see that the momentum is winning. I mean, weakening. But you can still attack here, but you can get a fewer pips. So you are close to resistance. It's not advisable to attack the market close to resistance. So you have really to wait for a retest. And what happened right now in the market? Do the what? Ranging. As you can see it here. The ranging again, respecting this trend line, this horizontal line, as you can see. But if you're going to analyze the structure, you can attack the market inside the ranging market. You can see that one. You can attack this one, just like, for example, when the market was break this trend line, you can see the horizontal line here was respected. So you can play around with inside the ranging market. You can see that one. It was respected and tested. So what you're going to do is you're going to go to 1 hour if you want to attack this market, so that you can see that the market is violated and you can enter right here. At least this is more or less 60 to 80 pips. You can see here violated, retested, and what? Movement of the market. But we must be very careful because on daily, this is well respected, right? So, as you can see it here, if you are going to analyze in detail, the market really loves to violate the structure.
Buy nothing. That's it, man. Saya.
What is that? A little bit noise.
Buy nothing. That's it, man. Saya.
What is that? I hear a noise. So this is how to attack the market on a structure. This is really what the Forex market is doing. So you need to practice this on backtesting with the backtester that we have in TradingView. So as you can see, this is certainly a structure that was broken, violated, retested, and attacked. Here, you can see it here, retested, and sell. Sell, and sell, but you have to be mindful of the structure. Right here, it was really clear that this structure, when this candle broke this one, retest, 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 it was not successful, it fails, and you can see rejection, rejection. So it went up and went up. So you can see clearly here that the market is ranging. So if you go to 1 hour, the market will be, this is how to make the confirmation that you can see another structure. So yeah, we have really to be mindful of the market structure that it is breaking. So if we go to 1 hour, you can see here that there is another structure that will break and retest and sold. Break, retest, and sold. So that's how to attack the market. If you do it like that, then you will be profitable. So just like, for example, if you are going to attack it here, stop loss below here, keep doing it in the long run with high R to R ratio, in the long run, you will be profitable. So in daily, we understand that this is the range in daily. Let's move it forward. Okay. Yeah. So in daily, we understand that this is a market structure, but you can attack it here to lower time frame. But in daily, you can see clearly that there is a retest on this breakout. See that one? But you can see here a climax. See that angle? Climax, then break this level, retest, then went down. You see that one? Break that levels, there was a retest, sell. Here, break that level, move the market 1, 2, 3, then sell. See that level was broken, retest, sell. Here, retest, sell. Then, when it reaches this area, the market was not able to break the structure. Instead, it break the high and retest, then it changes. So that is the way that we are going to analyze the market. So in slower time frame, we can see that this market is downtrend in lower time frame, but in daily, this is ranging. Here, downtrend, uptrend, downtrend in smaller time frame. If you are going to look in 1 hour, certainly this is downtrend, then uptrend, downtrend, uptrend, but we will always be mindful of the primary trend, which is the 1 hour. So we certainly understand that we're going to attack the market on a retest. As you can see it here, this is a structure. If you can see it here, this is support that was broken. See that? 1, 2, support that was broken, retest, attack. Here, this is a structure, then broken, attack. Here, you can see this is the breakout point here, retest, then attack. All my mark here, you can see it is the best way to attack the market. So you have to always remember that we are going to attack the market on a retest. Or if it is failing to make a lower low, just like for example here, you are going to attack when it moves out and test this level and move up. Okay, so in Ichimoku, I can show you because in Ichimoku, if we are going to change this into a line, see that one? You can see here the structure clearly. You can see on the spike, that is a structure level. So that's a spike structure level. You can see it here. The structure was broken, retested up. Here, the structure broke, retested. See that one? So the Chico represents this structure. So You will understand the market structure by looking at the price line. So that's the useful of the Chico line. Without looking, you can see it here that this is a good level, support area, broken, retest down. Here, if we go back in this location, let me check. This area, you can see it here, very clear. This is a good structure level. But if you are going to look at the candlestick pattern, you will be confused because there are wicks here, wicks here, wicks here. But here, that is the level. You can see here a wicks, and it will move up. Like here, the level is here, right? So certainly there is a wick going here. So that's now how we are going to integrate the Ichimoku. So I don't know, George, if what is your idea on the best setup of attacking the Ichimoku? Can you share your idea on how to attack the market with Ichimoku?
Basically, how I use it, I wait for the breakups outside the Kumo round.
So breakout.
So if price breaks the moving averages and the Ichimoku crowd, if it breaks above, I buy. If it's below, I sell. That is basically what I do in the Ichimoku.
So when it is breaking the cloud, you're going to buy.
Yeah.
When it is below the cloud, you're going to sell. Certainly.
Exactly.
How about the Chico? How you're going to take note of the Chico line? What does...
I don't use it. I don't use the Chico line, Kijusen, and Tekken-sen. I only use the crowd.
How about the Tinkan and Kijun?
Sorry?
The Tinkan and the Kijun, how you're going to use it with your Ichimoku attack?
Yeah, that's what I'm telling. I'm not using those 3 lines. I only use the Kumo crowd.
All right. All right. Since I know how you attack the Ichimoku, I will present to you integrating with market structure. I know you understand that we are going to attack with the retest. We understand that the market is going up, retesting. So we understand that it is a bullish market, right? When it is breaking structure down, going down, then there is a trend line. Then we understand that we are going to attack the market on selling, on a retest. So in Ichimoku, I will show you the good setup on how to attack the market with neutral signal, weak signal, and strong signals. All right, so let's begin. So Ichimoku is really a nice indicator to use if you know how to use it properly. But you have really to use the 5 lines. So what does it mean with Chico? Chico can help to know the momentum. What else? Chico, we can use that for taking profit. Tinkan, what's the use of Tinkan? At Chico as well, you can use that for support and resistance, good level. As I shown you on the price, because Chico is a moving average that was 26 candle back, right?
Yeah.
So the Tinkan is the 9 candle moving average, but it is taking note of the high and low, right?
Yes.
As well as the Kijun, it is the 26, and the Kijun and the span A is the Kijun and Tinkan divide by 2. So that's the Kijun, span A. And the span B is 52 candles, right? It's the future 52 candles. So, the market tends to go back to the median or to the mean. So, the Kijun is a midterm bullish term when it is bullish. When Kijun, the Tinkan is the short-term bullish term. And the Como is the long term. So when the market is moving up, you have to wait for the pullback to Tinkan when the movement is really strong. You can see that the Tinkan is respected. So in that way, you can attack the Tinkan as it will retrace the Tinkan up because the Tinkan is a minor support and resistance, right? The Kijun
Yes.
is a major support and resistance, as well as the Como is a K level resistance for long-term direction. Okay, so I'm going to show you integrating market structure using the Ichimoku candle. Then we are going to analyze if the Ichimoku support our entry for our long entry. All right. So let me plot my Ichimoku here on the market that we analyze. It's daily. Let me go back. Where is it? Okay, it's lagging. I cannot drag it right away. Okay. Yeah, so we are here. I'm going to erase all the drawing. Erase all the drawing. Then let's plot Ichimoku. All right. So, as you have said, you are using Ichimoku for a breakout. So we use that as breakout Como break strategy. So this is it. So this is a very strong signal for a buy somewhere here. You can see that the Chico line is above the price. It's breaking the Como. So this area is a good entry for a buy. As you can see it here, there is already a Tinkan and Kijun. You can see it's kissing each other, right? And looking to the future, it is angled up, right? You can see that the market is pointing upward. So in this location, upward, 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 upward. So meaning to say, in this location, the market is really strong, right? In this right here, this is a weak signal, but we can use also, if we are master with our Ichimoku, we can use this as our entry, right?
Yeah.
By looking at why I say that this is a good long entry. Others, they will say, it's too late to use Ichimoku to enter the market. But if we look at to the structure here, right here and going here, what can you say? What can you see, George, on this movement? 1, 2, 3. What can you see on the Chico? Even looking at the Chico.
And see head and shoulder, inverse head and shoulder.
Exactly. So that's we can utilize the Chico to know what is happening right here. So if we go back to our market structure, this is the right level. So we understand that there is a small corrective structure. This is certainly the level right here, right?
Yeah.
As you can see here on Chico, you can see that the Chico attempt to make a lower low, and this is it, and try to retest, and it made a pin bar. So in this location, this is a good entry on the bottom of Ichimoku, as you can see it here. And you can see it's a head and shoulder right here. It was retested because this is the neckline, failed, although you can more or less get 80 pips right here, and the market tests the what? The support.
The low.
Yeah, but if you are going to further investigate it, you can see here first attempt of the market, second attempt of the market, and you see that there is a 1, 2, 3 setup, right? If you are a very aggressive trader, you can see this trend line, you can attack somewhere here, right? Stop loss here for 20 pips, and you catch this. Wow. How many pips do you think? More or less, this is 1,000 pips as the market move up high here. So, this is the strategy that we are going to attack the market. You can attack it on a low one. This is not low one. First attempt of the bear to break the level. Second, then third. And failed form. You can attack somewhere here if you are very aggressive. But the most safest way to attack the market, wait for the close of this pin bar. This is what you call this one, a pin bar. This is a hammer, right? And we can also
Yeah.
say that this is a morning star in this location, right? And followed with
Yes.
a very strong movement of the market. As you can see it here, using the Chico, you can see that one. That's the level. You look at here. There is span B acting as support. You look at one. The market tried to break that span A, failed. Look at this level, try to break it, failed. So, and we can see here, first attempt of the market to move down, second, third. So, the number 3 is really a magic number in attacking the market. So, the one that I presented right now is an aggressive entry. 1, 2, 3. If you're going to draw another trend line here, you can see that one. See that one? Well respected. 1, 2, 3. Attack it here. Supported by our Chico. Supported by our price above the support. And break it here. But people who are conservative, they will attack when the Chico, well, the first signal actually happens when the Tinkan will cross the what? The Cajun. Here it is, the first signal. The second order is that Chico will cross the price, right? And the third one, other call this as 3 golden crosses, right? Have you heard that one?
Sorry?
The 3 golden crosses. When the price when the Chico cross the price, that is a gold cross. When the Tinkan cross the Cajun, that is a gold cross. And there is one thing also. When the price, there is also a strategy that we call in Ichimoku. When the price cross the Cajun, we call that as a Cajun cross, right?
Yeah.
But we have to always remember that in this location, the signal is weak. When the Chico is inside the cloud, it is neutral. When the lines are flat, we have to wait when it is angling up. If we are going to look at here, this is the 26 future. So in this location, it represents the future Como. This is the present Como. Look at the angle. So this is really a good entry for long, even looking in this location right here. So it breaks that structure. You can put buy stop here, stop loss here. You can catch this strong movement up. And why I say that when the Chico is a good taking profit, as you can see here, we are going to analyze the market from here. The Chico, we can attack the market with Chico breakout right here. You can see here, breakout. You can see it here below the cloud. This is the 26 backward. You can see that the price is below the Tinkan and Kijun. Attack the market here. You can use Tinkan as your trailing stop, but the safest way is to use the Kijun as your trailing stop. 1, 2, 3. There are a lot of strategies on how to trail. You can use also parabolic SAR. You can use also fractals to follow your stop, to trail your stop. Or you can use the cloud as well, but your risk will be wider. Here, here, as the market will move down here, you can put it here. But how to maximize the profit? You have to look at the Chico. When the Chico is close to the price, take profit because the market will be ranging when the Chico is close to the price. When the Tinkan and Kijun are flat, you can see it here, flat, flat. It tells you of what? What do you think, George? What does it tell us? That the Ichimoku?
That the price is almost ranging.
Exactly. We call that in Ichimoku as the market is in equilibrium, looking for a fair price, right? So,
yes,
if you are a conservative trader, but for me, I can attack this location when the Chico try to break this area, because certainly we can see that this is a resistance area by looking only on the Chico. As you can see, if you are going to move back, you can see it here that this area is a resistance, right? Tested,
yeah.
failed. So this is the area when the Chico moved down. You can see this structure was broken, structure broken, retested, moved downward, retested, moved downward. And what chart patterns that you can see?
That is a flat correction.
What?
A flat corrective pattern.
So correction, you mean corrective structure, right? You're right.
Yes.
But in chart pattern, there is what we call also as expanding triangle. Did you see that one? So it really
I think he
needs.
might be saying something a
You see
little
that?
bit different.
Yeah, this is corrective structure. Actually, those triangles are corrective structures, but specific name is expanding triangle. Did you say that one? Did you see that one? But if you want to attack the triangle, you can apply buy low, sell high, and scalp, right?
Yeah.
For example, when the market tried to move down, 1, 2, 3. At 3 strike, look at what happened. What do you call this one? Breakout. We can say that this is a harami, right? And then the total formation of the candle right now is a morning star. So when it is a morning star, bullish. So you can attack somewhere here. Target profit here for a short-term attack, right? The structure holds here, attack it here. And you can see that on one, I mentioned that on every number 3 attempts, and when it fails, that's a good entry. You can see it here. Did you see that one? 1, 2, 3. It's a good sell entry. Broke out this level, retest, good entry, right? As you can see, if we are going to extend this market down, you can see it here that this trend line was respected until here, right? You can draw that trend line, and that's a structure, right? That's a structure. Oh my, just a moment. So certainly right here. So, and you can see a well-respected trend line right from here. See that one? Where is it? Come on, trend line. Happen to you, trend line. This is the thing in trading view. Sometimes you have to be really. You see the one, first strike, second strike, third strike failed. You see the selling pressure, sell. Or you can wait for breaking the structure. If you are going to, I know that you understand, if you are going to check on lower time frame, break of the structure, violation, retest, attack, right? Look at the Chico.
Yeah.
By looking at the Chico, it helps you to clearly see the structures. Look at it. Even imagining the Chico here, the Chico is telling you the perfect level, right? See that one?
Yeah.
So we don't need to change it to price line, because it sometimes by looking alone on candlestick, it becomes blurry, right? Not so clear. But with the aid of the Chico line, which represents this movement, you can see there expanding triangle, right? 1, 2,
Yes.
3, triangle, another formation. I can say that this is not expanding triangle, but this is a descending what? Channels. We can therefore say this is a descending channels. All right. So, those are the, let me erase all my drawings. So, what is the essence of Ichimoku right now? For you, George,
Yes.
what do you think is the essence of Ichimoku in your trading?
It's just a support of where the market trend is headed.
What is it? I did not hear you clearly. Can you
Okay,
speak
I mean
louder?
it's an easy way of getting the direction of the market.
All right. So this is a best trend following indicator, right? And the thing is, you will know that the market is in balance, right? So you can
Yes.
change actually your strategy, because we have a lot of strategy on how to attack ranging market, breakout market, and what else?
Trading markets.
Yes, exactly. So right here, you can see that the Chico is on top of the price, strong momentum up. So this is the area. 26 candle, this is the area. So it's really a good attack here. Market strike again. Look at the Chico. It was not able to break the price because it acts as support. So it clearly tells you that this is support. And to be prudent, don't sell. So you have to wait when the Chico will cross the price. But this is still weak signal, right? Look at this. So you have to wait when the Chico will test. You can see also that the price is testing the resistance. Look at here. This is the exact level here. Here. Then when it tested here, here. When it moved here, and when the Chico tested this resistance, look at what the Chico is telling you. It's below the price. Look at the Kijun and Tinkan. What can you say? What can you see? It's below the price. It's angled down. Look at the Como. It's the span A is below the price. The angle was very steep, right? So
Yeah.
my question is, would you attack for a bull here, for long entry in this situation right here? What do you think?
No, I think the best option is to attack on a short position.
At a retest, right? You
Yes.
see, there is a wick. This is the structure. Trying to break that structure on candlestick pattern alone, we can say that this is a structure that needs to be broken. And look at what happened. The structure was not broken and the market formed a selling or a wick. And in this location, big investor or institutional trader come in and push the market hard, right? Look at it.
Yep.
And you can see here, what do you understand in this location? Where is the structure? By looking at the Chico, you can see that this is the structure that we need to observe. This one, right?
Yes.
And this one. And what did you understand? The market moved down, moved up, tried to make a double bottom and failed. So this is what we call this one, pattern. Failure of making a double bottom.
I don't know that one.
Reversal pattern. Because W or double pattern are reversal pattern. M or double top pattern or triple tops are reversal pattern. So you can attack here on the retest. You can see that pin, that tail. It's a retest to this level. So you can attack it here. And I mentioned that the market loves to go back to the mean. Look at what the market did. Go back to Tinkan, go back to Kijun, and go back to the mean, which is the Como. Right? When the market is far away from the mean, it tends to go back. Look at here. Far from the Como, go back. Far from the Como, go back. Far from the Como, go back to the mean. Far from the Como, go back to the mean. But as you can see it here, the price was not able to break the support because the lines on the Como acts as support as resistance. This is support that was not broken. Look at the Chico right here. It's above the price. Look at the price right here. This is the representation of this Chico. Look at the price right here. It's above the price. So what do you think? Is it good to sell in this location if you see this one? And the Chico is above the price.
It's a good buy.
Yeah, this is a buy. And our number 3, our magic number 3. Did you remember our magic number 3? Look at the trend lines. See that one? This is a descending channel. Look at the descending channel. Did you see the descending channels? So there are many ways to attack this one. You can attack at the third attempt failure to break the support. Look at the Chico, and you can see that the Chico is telling you this is a descending channels. Testing the support, move up. Testing the support, move up. If you are going to analyze it here, the Chico break this structure, retest, exactly right here, break the structure. This is the structure here. You can see supply area, right?
Yes.
Somewhere here. It tried to test the supply area and it went down. What? Right here, this is the broken structure. Look at the Chico. That's the line. That's the confirmed level. Look at the Chico. That's the line. It tried to test it, and the nice thing is there is a trend line. Test the trend line in confluence to a horizontal line. What do you think about that entry? Is it a nice entry to go short for the third attempt of the market to go down at the retest? So this is a nice attempt to go too short, and you can see it was broken. It retested, but what happened when it tested this structure? The market tried to retest, but it was not able to make a lower low. Instead, it makes a try to break the structure upward. So in this location, we can say there is a actually I could call this one as Tinkan cross. You see that one? When the Tinkan was crossed, it crossed the Tinkan and tried to retest it, And move up, here we can say that there is a Kijun cross. But you have to wait for a retest. This is the support. Kijun supported by Tinkan. Retest that level, and you can see here when the Komu is flat, it will attract the price. Look at it. So when the price see that it is flat, it try to attract the price. So you must be careful when the lines are flat. So you have to wait for the retest of that line and attack the market, and your stop loss below that line. But you can go also on the lower time frame, the same thing. When there is no broken of structure, as it moves up, you can see it here, the structure was broken, moves up. But on this attack, do not chase the market. You have to wait for the retest and attack the market for a discount. This is for confirmation that we will not bring our account into what? Blown out account. So I would like to ask you, George, how many percent of your account to risk for each trade?
Sorry, I didn't get you.
How many percent of your capital to risk for each trade?
1 to 2%.
Yes, you are correct. But I developed a strategy so that you will not be affected with the trading psychology. You have to build up the 2% on trading it small. Just like, for example, if you have a $1,000, how much is the risk for $2,000? $1,000. How 2% is how much in $1,000?
That should be around $20.
Yes, $20. So what I'm going to do, I'm going to have a smaller position size, build the $20, risk only $20, or target that one, then trade big with a 2%. When I keep winning, because our R to R ratio should be what? The best, we should have a high R to R ratio. 1:5 is the best, or 1:3, or 1:2.5. Because in risk of ruin, even you lose for 6 times, so you will have 40% of accuracy, you are still profitable, right?
Yes.
So if you have a 3 trades right here, for example, you long here, winning trade, target here. So probably your stop loss is here. This is 1:3, most probably. And when in case you lose this one, you lose only for $20, you win 100. So you have still $80 out from your income that you're going to risk. But certainly, if you master how to attack the market, because the best way to do or to perfect your attack of the market, you have to do back testing all the time to hone your skills. So that's the secret, and develop a winning mindset, not to be emotionally hijacked, not to be in greed, not to be in fear, not to be in euphoria, not to be in what? Addiction, meaning to say, when we do trading, we should have an objective analysis, not only with intuition, but with deliberative analysis. What I mean by deliberative analysis is we should have check all of the angles of the market. Not if we see this, buy. No, not like that. And we should have a humble personality, because arrogant people will not be successful in trading Forex if they are arrogant, right? Stubborn people will not really success in market. So that's why if you have a good trades, you will be successful in Forex trading. You have to be very careful that when you are in emotional instability, don't trade, because certainly you cannot assess the market objectively. All right. So, George, I think I've shared a lot from you today, and it's time for you to ask questions on the things that I shared for you today with my presentation. So, do you have any questions?
Not really.
All right.
But so let me ask her.
Yeah. What is
So
your question?
you only use the trade lines and the Ichimoku only.
Actually, I have many strategies because I'm a student of Chris Capri. I'm a
Yes.
student of Carl Borgatti. I'm a student
Yes.
of Kay. I spent thousands of dollars for my education. I'm a student of, I have Elliott wave analysis with
All right.
Robert Pritzker. I have
Mhm.
Elliott Ultimate. I have Elite Currency. I have Albrook. So the one that I explain here, those are concepts of from the mentors that I learned in Forex. So
Wow.
though
Because I find I'm using Ichimoku and trade lines. Which one is your best of all the strategies you use?
the best strategy is to master your price action analysis. The one that I shared to you, by knowing the structure, waiting for the retest, that's the most profitable way of entering the market. You have to be very careful with the news releases, right? FOMC, F, the F, what you call that one? N farm,
NLP.
NPA, right?
Yeah.
CCI, and high impact news. So that's why we need also to check our Forex calendar. Don't trade because what will happen on high impact news, the slippage will become a risk, right? After the news will be released, you can see that the slippage is high, right? Because most of the
Yes.
traders, they will not be trading on news releases because the slippage will really be high on high impact news releases, and the price is moving like crazy, right?
Yes.
So you have to avoid news releases. And what else that you need to avoid? Asian opening. Have you observed on Asian opening that the slippage is high on the first opening? The spread is very high. Even my account is commission account, but
Yes.
even it's a commission account, but there is still a high slippage. My account will have like zero point 0.2 spread in non-volatile market, because if it is high volatile market, that's why it's also nice to attack on the corrective structure, because in that area the market is less volatile and the slippage is low, because slippage is already a risk. Slippage, what else? The commission is a risk, so that's already part of your calculation of your risk. That's why when your stop loss is wide, you have to reduce your stop
Lot
loss,
size.
your position sizing, right? What
Yeah.
calculator are you using for reducing your position sizing?
I don't manually.
You can use actually my FX calculator. You can put there your account, percentage of your risk, if just like for example 1%, then you can use money or uh, pips. Then below, when you're going to click calculate, you can see there, it will give you exactly 0.1, 0.1 pips. Or if you have a big account, if for example you have $100,000 account, it will say you can trade for 5 lots, so 5.0. So that's the best way to, that's why when your account is very big, it's not really good to have 2%, because in 100,000, if I will trade 100,000 of my USD account, what I'm going to do, I trade small, make a profit of 2%. For a bigger profit, I will risk that 2%. But when that 2% will be lost, I will go back to square one to protect my account, right? And my trading psychology will not be affected, right? I will not have an emotional pain. I will not have loss aversion. I will not have like fear. I will not have like greediness. I will not be chasing the market because of the thing that I'm teaching you now, or the thing that I'm sharing. We have to wait for a discount. That's why we need for a retest before we attack the market. But we should read the market at a precise. We have to wait for a clear violation of the market structure. Because if we are going to use a fractals, every fractal breaks is a structure, because fractals is the map of the market structure, right? If you are familiar with fractals, because those labels that are marked, certainly it has fractals. Let me open my CTrader account just to show you, or let me open my CTrader. Just a moment, let me show you it, so that you can use also fractals, and I can teach you also how to have a tree following with fractals and parabolic SAR. It's the safest way to have a guaranteed stop loss that will not be targeted by the big players of the market. Just a moment. There are certainly many ways that we can attack the market, but the one that I presented you today, if you can master that one, certainly you are profitable. The right discipline, neutral state of mind, and it is the most profitable way of attacking the market. But you don't need to be arrogant. You don't need to be telling yourself, I know where the market will be moving, because we are uh, trudging in a market of uncertainty, right? That's why we have a stop loss location, because we don't know what will happen next, right? That is Mark Douglas, trading psychology, right? So
Yes.
we have to be very careful. I have a lot of trading psychology, actually. I have Gary Dayton. I have, what else? Gary Dayton and
Can
Alexander
you send
Elder.
me a couple of the psychology books?
Yeah, I do have ebooks. So that's
Should
why.
I send you my email? I can send you my email.
What is
Can you
it?
share them?
Yeah, I can.
It's George. Let me send you my email right away.
Actually, I can share that to your Discord if you'd like.
Yeah,
So
if that's possible, then you can do that.
what is that?
You can share on Discord.
Yeah, because I have a subscription on Discord, I can send a big files if you'd like. That's
All
why
right.
all my tools are really valuable. So I'm looking for the right guy. I'll not be doing this if the guy that I'll be sharing, I sense like bad behavior, misdemeanor. But I don't know who's talking about lately. I hear something reacting of the way I share the market. Who is that?
I didn't get that.
Yeah, I hear that one reacting, saying buy a text, sell a text. Where's that one? Those are the behaviors that I don't like. Those are people who will not be successful in trading forex if they are like that. They are not
Yeah.
open for the market. So if you have a behavior like that, I will suggest to you that you should have a traits of a successful traders, not the arrogant behavior, because most people who are arrogant, that's why lawyers and doctors, highly intellectual people will not be successful in forex trading, because they have a stubborn belief that can hardly be broken. That's why they will not be successful. So I'm telling you now, you should develop a good traits to be a successful trader, right?
Yep.
So that's why in my my group, I will kick up certainly people who are fighting and having a behavior that is not appropriate and can destroy the mindset of others. So I am the moderator of the group. So certainly I will be kicking out people from the group that I have. This video that I have, because most of my members are from United States, Australia, so they're sleeping. That's why they are not around. I will just be posting my presentation and they will be watching it later. So I have only 14 groups in my group. because I don't want to have a lot of people in my group because it's hard to manage. And most of my group members they are really good people. They are traders.
Yep.
Some of them are market profile traders. Some
Yep.
of them they are really highly educated forex trader. Most of my members. So they are from Chris Capri. They are from Albrooks. I introduced them Albrooks, so they are learning as well as Albrooks. So that's why I screen people to enter in my community. I have to observe the behavior before I will let them in because I don't like people who are arrogant and it could destroy certainly because it will create fighting in the channels and it could destroy the mindset of others. Right? So before I will end our presentation today, just I will show you how effective the parabolics are and the fractals just for a quick because those are structures as well. But for me, I can use without the fractals because I know those are fractal level, right? You remember Williams? He introduced fractals, alligators, and other stuff. Can you see now my screen? I'm going to show you my screen so that you can see the fractals on my C Trader. Just for a while. Can you see now my screen, George?
Yeah, it's yeah, I can see it now.
Did you see the fractals?
I can see them.
Yeah, so if you are going to see the fractals, these levels are key levels. As we discussed right ago, it's key level, right? It was not broken, right? When it is not be broken, and you can see that the market is broken, breaking the bear fractals on the lower portion, broken here, it broke here. So certainly the market is downtrend. So the breakout will favor on going down if the fractals is doing like this, right? So
Yep.
if we're going to look at the other way around, you can see here, this is the one that we analyze, right? You can see
Yes.
here that this is the lowest fractal because the market will begin in a fractal and will end in a fractal. You can see this is the fractal. It was not broken. And this fractal was broken here. Lower time frame fractals was broken, but this fractal was not broken. It keeps breaking fractals, ball fractals. Right here, you can see that this level of the fractal was not broken, but you can see it was broken here, and certainly this is the ending of the market. And you can see it here. This is ABC correction in Elliott wave. This is measured move. This is equality, right? We can say that this is wave 1, wave 2, wave 3, wave 4, wave 5, right? Elliott wave. This is Elliott wave, right? First one, retracement. You can say 1, 2, 3, 4, 5. Because the wave 3 is always the longest. You can see it here. Always the longest. And wave 1 is equal to wave 5. See that one? 638 here. 630, almost the same, right? Equality. This is, and the rules in Elliott wave, the wave 4 should not go inside the wave 1, which is this one, right? I'm going to mark it for you. Are you familiar with Elliott wave?
I'm a fan of his work.
Yeah. So there are many variations. There are exemption of the rules that see that one. This is exactly in the rules of no, that's not the right way. I did it wrong just for a while. Elliott wave is like this, but you have to remember in higher time frame, in lower time frame, there are form another Elliott wave in each time frame, right? So this is one. Okay. This is. Did you see my screen? 2. Usually the wave 2 will move to how many Fibonacci level?
That one is anything between 61.8 to 99%.
Yeah, that could be 88%, 68%. That's usually Fibonacci level that the wave 2 will be retracing. Look at the wave 3. wave 3. See it here? Wave 3. And here, wave 4. And you can see the rules is the wave 4 should not go inside the territory of wave 1. See that one? That's very far, right?
Yep.
And then wave 5. See that one? Then ABC, ABC. But this is not a perfect ABC. I could say ABC, ABC, right? Because these are, and you can see it here, 1, 2, 3. So I could say A, B, C, D, E, right? A, B,
Yep.
C, D, E, then sell. Then I could say here, this is certainly, this is correction. A, B, C, right? And here is like A, B, C. You see that one? And if you're going to look on lower time frame, most probably this is composed of 5 waves in 15 minutes, 1 hour, right? So in this structure, actually, you can see that the fractals were not broken, right? This is a climax, and the market moved down here. And if you're going to say it here, it does not really comply with Elliott wave, because there was no wave 5, right? See that one?
Yeah.
We can see this is wave 3. We can see this whole movement is, and here is 2, 3. But where is the wave 5? Nothing, right? Instead, the market turn around, and you can see here wave 1, wave 2, wave 3. Where is the wave 4? Wave 4 here, breaking this, but this is exception of the rules now, right? You can see it here inside the territory, but this is a negative gap. And wave 3, so I can count this one as wave 1, wave 2, wave 3, wave 4, wave 5. Or I can count this wave 1, wave 2, wave 3, or I expect wave 5, right? So I expect like as high as this. I expect here wave 5 if the like that, wave 4, wave 5. So it could form like that if this wave territory, most certainly this area will, the market will break a little bit and test this area if we're going to plot Ichimoku. So you can see I look at the market in different ways, right? Because I learned many strategies. Look at it, support. You look at the Kijun, look at the Tinkan. Tinkan is in equilibrium, so most probably the market will be playing around this area. This is a corrective structure, so I will look for entry here, test, then buy. Or I will expect the market will move it here and test, then sell. And most probably it will create wave 5. Because if you are going to look in the cloud, the future is bright, right? Look at the cloud. The future is bright. The cloud is thick. This could hardly be broken. So there is a tendency that the market will, will strike that one and will move up. So, but if the market can break this level, so I certainly say that the structure or the market bias changes. In wave, are you familiar with the N wave? I wave, P wave, with Ichimoku, there are a lot of things to be learned, but by using the things that I teach you, it will be very beneficial for your trading if you mark the structure. So I would say, because in Forex trading, you should be mindful of the structure and act on the retest. So I hope you are learning a lot. So have you seen the our analysis with the fractals? It was broken because fractal is a market structure, right? Let me erase the fractals, and we will go to the race indicator. This is my say trader from Paperstone. I have a lot of brokers. I have Global Prime. I have XM. I use Traders Evolution on Global Prime. And I use on XM MT5, and in Paperstone I use C Trader. I like C Trader also. So one way, before I will end our presentation today, I will show you the parabolic SAR as good, trailing stop following. What do you think is a parabolic SAR? What indicator is that for?
It's for trend.
Exactly, you're correct. So you have studied a lot really of, can you see my, please remove my window. All right. Can you see now my screen?
Yes.
With the
Yes, I
parabolic
can see
SAR?
it.
So
Yeah.
you can see it here. If you have an entry here, you can follow it here. When the market move here, if you follow the SAR in daily, you are not stop out. We're able to squeeze the market up to here, right? See how
Yep.
powerful parabolic SAR is? So
Yes.
that's how parabolics are. And you can see, are you familiar with impulsive and corrective structure?
Yes, I am.
Yeah, so this is impulsive. The whole here, large corrective structure. Actually, the market was been ranging in this structure from here going here. And you can see ABC correction, right? The whole here. This is ABC correction. This is A. You can see this also as ABC correction. B and C. You look at the distance here. And 1,224. Here, most probably yeah,
But let
equal.
me ask.
Yes,
I have a question.
yes, what is it?
Your wave A, the one you have labeled wave A has 5 waves within.
What? This one?
Yeah, has 5 waves.
What has what?
It has 5 waves from the bottom to the top where you have labeled A.
This one.
Yeah,
So
that one is
I'm looking at the bigger structure actually. So
all right.
I'm not literally imagining of the detailed structure, because it's really important to look the structure. So what I imagine is like this. With this structure, the market move up here up to here. That's why my A is here, right? So supposedly, so, and the market move here. That's why I drew it like that. And we can say in Ichimoku, this is a big in wave pattern. Are you familiar with in calculation? When it moves like
Not
N,
really.
it has equality from here going up here, right?
Yeah.
So that's it. So do you have any more question? I will be ending my, I think we are almost 2 hours with this presentation that I have today. I know that you are learning, or you can get something of what I'm presenting today. And just ask me. It's a free service. I have a heart for people who love to trade, because I know how it feels to blown out your account. I've been a trader for quite sometimes. I lost my account before, but now it's growing bigger and bigger. So that's why I love to share what I know in the market. So I'm a type of trader that studied a lot of education. So that's why I can analyze the market in many variation. But the thing that I share to you are the most effective way of analysis. Market structure, strategy, attack, right?
Yeah.
So do you have you have a last one more question? Then I have to end. If no more, then I have to end my presentation.
No, I don't have any more questions.
All right. So thank you so much for attending today. Good luck to your learning, and I know I can gauge you that you have learned a lot in the market. But I will stop my recording. I can stop my recording. This is recorded because I'll be posting this to YouTube. I'll be sharing this to the group. So I will stop my screen right now, and I'm going to stop my
All right.
recording.
Thank you.